What's up, stock compounders? Brad here. So today I want to talk about ASOS. Okay, ASOS originally came across my radar through Nick Sleep in the book Richer, Wiser, Happier. A lot of you have been asking me about ASOS recently as the price has just been coming down and down. So I decided to do some sleuthing and just want to share with you guys what I've discovered about ASOS. And of course, I want to learn what you've discovered as well. So hit me up in the comments. So first of all, what is ASOS, right? ASOS is a global fashion online retailer, okay? They have a big presence in UK, the European Union, and the US, and very impressive growth rates in those three markets since it started. It started, I think, in the year 2000 by Nick Robertson. ASOS actually stands for As Seen on Screen because the company was originally a TV product placement company. So As Seen on Screen. That's how it got its start. Nick Robertson is actually still involved with the company. He owns, I think, about 3% of the outstanding shares. So, I love to see that from an investor perspective. That it's founder led in a way, with the original founder still having a decent stake. I think it's maybe 1/2 to 1/3 of his net worth. Nick Robertson. I can't tell exactly what Nick Robertson's net worth is, but it's a sizable insider stake, which I like to see. So there's a couple reasons I want to discuss real quick about why there's just been a beatdown in ASOS stock price. So first of all, if you guys look over the last 16, 17 years, this is the majority of the time the company has been public, you can see this run up here. So there's a run up from 2005 through the middle of 2011, okay? That was like a 50x increase in the stock price, okay? 50x. You've got a little dip, and then it just continues on a tear here, okay? So over this, say, 9 years or so, 8 or 9 years, the company was 100x, all right? If you had bought, say mid 2005 and held on through the beginning of 2014, you got 100 bagger, okay? So the challenge of that is investor expectations are through the roof, right? ASOS was the poster child of e-commerce in the UK. So there was so much built in to the price in terms of expectations at this point. So you can see how it's done over the last, 7.5 years. It's done very poorly, okay? It's come down more than 50% over the last 7 years. So investors have not had a good time in this period with ASOS. Now, there's a few headwinds, okay? One is that ever since Brexit in the UK, ever since UK decided to leave the European Union, there's been a lot of cash outflows, a lot of investor dollar outflows from the UK market, okay? And that's been very steady from 2016 until today. So that's a headwind facing any company that's listed in the UK. Another thing, obviously, that just happened recently, you've got the CEO stepping down with immediate effect, okay? And ASOS doesn't have a backup CEO in place, right? They're searching for their next CEO as we speak. So that's pretty unusual for a CEO not to give, 6 months, a year of notice before they're going to step down. So that's a concern, right? Obviously, CEO is probably the most important position, the most important seat in a public company, right? It's the person steering the ship of the business. And we don't know who that person is going to be. Okay, so that's a big uncertainty, and markets do not like uncertainty. Okay, they hate uncertainty, and that's really showing up in the crash of the stock price recently. So another thing, weak forward guidance, at least through the middle of 2022. There's supply chain issues that ASOS is facing. They've projected, they're only going to grow 10 to 15% through the middle of 2022, as opposed to, what they've done, what their average growth rates have been. Let's take a look at that. North of 20% per year. So let's look at the last 11 years or so. If we look at the revenues over the last 10, 11 years, it's a beautiful growth curve, okay? From 223 million pounds to 3.9 billion pounds, okay? Almost a 20x in revenue growth over the last 10 or 11 years. Okay, very strong revenue growth. And, based on what they've done in the last year, it seems like that revenue growth is continuing. Okay, there's really no signs of that revenue growth slowing down. A little hiccup in the next 6 months, 9 months. But, according to the guidance for the next 3 or 4 years from ASOS, which I can pull up right here. So I haven't looked through the last 10 years or so of ASOS annual reports, but people who are invested in the company, who have followed the company for a while, they've said management tends to be conservative with their near-term projections, their targets for things like revenue and earnings and growth. So so the CEO is a big question mark here, right? Obviously, if they're going to hit 7 billion in revenue by 2025, they've got to have the right person in place in terms of CEO. So that's a big question. But let's assume they can deliver like they have in the past with these kind of near and midterm projections. If they can hit 7 billion in revenue, with greater than 4% EBIT margins, let's take a quick look at just some valuation stuff here. So if we go into ticker terminal with ASOS, I want to look at the last 12 months total enterprise value to revenue, okay? Current enterprise value is around 2.6, 2.7 billion. So, and let's go back a little bit further, actually, to see what's been a historic, EV to revenue multiple for ASOS. So, in 2015, 2.5 kind of approached 3 at one point. So that's about the high. We've got 3.05 here in 2017. And then we're currently sitting at the low in terms of enterprise value to revenue ratio, around 0.68, okay? So, obviously there's a lot of bearish sentiment in the price of ASOS right now. So let's just assume that we have this same very low historically multiple in 2025, okay? A 0.68 EV to revenue multiple. So 7 billion in revenues, okay? 7 billion times 0.68, so about 4.8 billion in terms of enterprise value, okay? Right now we're at 2.6, 2.7. So if we If we do the math on that, we're looking at a 78% increase over the next 3 or 4 years, assuming we have this same very bearish multiple, okay? Now, if the multiple re-rates upwards towards something that's a little bit more, let's see what the average has been. So the average over that 6 years or so, 1.3, okay? So at 1.3, if we multiply that by 7, we're sitting somewhere around 9, okay? A 9 billion enterprise value. So that's more than a 3x from where we are now, okay? So those are just some initial ways that I'm thinking about, what might this thing be worth in 2025, based on kind of historical enterprise value to revenue multiples that the company has garnered here. And I mean, you can see this is just over the last year. But, if we look over the last 5 years, even the last 10 years on an enterprise value to revenue basis, we're basically at a low, okay? We got lower during the depths of the pandemic back in, March of 2020 when everything took a dive. But, other than that extreme event, we're really sitting at a low here. So that's potentially compelling, right? As value investors, we're looking for things where the price has been beaten down lower than what we think it's worth. So also with a business like ASOS, ASOS is very focused on delivering value to its customers over the long term, okay? And often sacrificing things in the short term that Wall Street really likes to see. Short-term profits, short-term margins. There was something I read recently. Let's see if I can find it real quick. Yeah, so ASOS refused to increase its prices recently to reflect the higher shipping and freight costs that they're incurring, okay? Most companies, if their costs go up, they're just going to pass those costs on to the customer, okay? That's sort of, business as usual in capitalism, in business. ASOS didn't do that, okay? ASOS is different in that way. It's more, if it's more in the mold of something like Costco or Amazon, where there's an intense focus on, customer first, okay? Providing value to the customer first. And one of the ways we can see that is by looking at, this is basically Amazon Prime, okay, that ASOS has adopted. So this is from the UK. We've got Premier Delivery, okay? It's £9.95, includes free delivery for a whole year with no minimum spend, okay? It's the same as Amazon Prime, effectively. Customers will receive unlimited next day delivery, okay? Next day delivery for most areas of the UK. They can't promise it to everyone. And, they kind of talk about postcode exclusions here. Presumably, it's just far too expensive for them to offer next day delivery in those particular areas. But, £10 per year for next day shipping for most people. That's pretty impressive. I think, what is Amazon Prime? Is it like $50? Not apples to apples, obviously. Let's look at Premier Delivery for ASOS in the US. $19 per year. Unlimited and free express shipping and standard shipping within mainland US for a whole year, okay? So, they are losing money hand over fist using this model, okay? But it's obviously it's going to affect the bottom line in the short term, okay? But you really can't understate how valuable this is to building long-term customer loyalty. All right, Amazon figured that out fairly early on. Was it like 2004 or 2005 that Amazon came out with Amazon Prime? And now, I mean, Amazon, it's that, Amazon is such a valuable brand, okay? So many customers, they don't even think twice about where to go to buy something online. They're going to Amazon because, they're paying this annual membership fee, which, even if it's something small, like $19 a year or 10 pounds per year, there's something that happens in customer psychology where, I'm a member. I'm already bought into this ecosystem and I need to get my money's worth. So this is where I'm going to go to shop, even if it doesn't make rational sense, right? That you're only laying out, 10 pounds or $19 over a whole year. There's something in the psychology that's like, well, this is my place to shop because I'm already bought in. So that's a really compelling piece of their business model for me anyway. Is this premier delivery subscription? So let's see, what else do I want to talk about? Skin in the game I already mentioned, so we can just go to the ownership tab and look at who owns ASOS. Unfortunately, I'm pretty sure Iggy Foundation owns ASOS. That's Nick Sleep's charitable foundation. They don't show up here. I think you might be able to see that if you have a membership to RDS Junction or Junction RDS. Or Deal Logic in the UK. I do not have that. Or Cap IQ in the UK. I think you might be able to see that as well. But you can see here, Nicholas Robertson. Okay, this is the founder of ASOS. 3.3% of the shares outstanding at 123 million is what those are currently worth. So big skin in the game, I would say there. What else do I want to talk about? Let's see. Yeah. I've hit on a lot here already. So I guess the things, the big questions for me around ASOS, can they continue to expand into markets outside of UK at a compelling clip, right? 20% plus revenue growth in those markets, and really start to experience the power of the scaled economy model where they're spending a lot of CapEx up front, capital expenditures. Let me just show that. The picture around CapEx here. So we go to the balance sheet. We're not going to the balance sheet. We're going to the cash flow statement, of course. So you look at CapEx over the last 10 years. Let's get rid of revenues because that's can't even really see CapEx if we've got revenues in there. So here's capital expenditures for ASOS. You can see they've put a lot of money into international expansion in 2017, 18, and 19. I presume we're going to see more and more of that into the next handful of years. It's the model right now. They want to kind of take over, at least in UK, EU, and the US. So that's it's not going to be cheap, right? They've got to set up warehouses, fulfillment centers. It's a lot to build out, and for that reason, the free cash flow is it's very lumpy. So let's take a look. I ran a few numbers based on the metrics that Fundsmith looks at. So, I thought ASOS is in the UK. Maybe Terry Smith has talked about ASOS before. Maybe I can glean something from him. But ASOS, it's too small. It's too small, I think, for Terry Smith to be, it hasn't even crossed his radar, I'm guessing. 2.5 billion market cap, where he's, that's even small for the Smithson fund, right? The small and mid cap fund for Fundsmith. But I decided to look at some of the key metrics that Fundsmith looks at, such as return on capital employed, gross margins, and free cash flow yield. Okay. Sorry this is so small. Hopefully you can kind of blow up your video and get a look at this. But I ran the same numbers for Amazon because I thought, well, maybe I can look at what Amazon was doing in the early years to try to get a sense for, how to look at the financials for ASOS to see, if there might be similar strategies being employed here. But, I needed to go back further than 2004 for Amazon, I think, to glean any of that. You can see here, return on capital employed. 2009 was the highest, around 66%, which is crazy. Over the last handful of years, it's been, 23%, 27%, 31%, 27%. Very strong until 2019, okay? And, it's been a little more challenging over the last 3 or so years, 2 or 3 years, in terms of return on capital employed. So, I'd want to understand that better. It's not really where I want it in terms of over 20%, ideally 25%, which is the average for the companies held by Fundsmith. We've got percent gross margins. Again, somewhere around 50% for most of the last handful of years, dipping a little bit as of late. Hopefully we don't see that trend continue where gross margins continue to decline. I think if ASOS can execute its growth plan effectively and get to those 7 billion revenues by 2025, I think we're going to see healthy gross margins continue. But we'll have to keep an eye on that. And then we got free cash flow yield. So free cash flow, like I said, if we take, operating cash, subtract out capital expenditures, free cash flow is very lumpy, all right? Again, which makes sense when you've got a business kind of in the early stages of growth, at least with what ASOS is trying to do with this massive global expansion. It's going to be lumpy, okay? That's just the nature of business and the nature of what a company like ASOS is trying to do. So currently, if we look at the last 12 months, the free cash flow yield, which is just free cash flow over the last 12 months divided by the current market cap, 6.3%. Okay, so that's very strong in terms of kind of the average for the companies held by Fundsmith, which is 2.6%. This isn't a normalized free cash flow number or anything like that. It's very difficult to do that because of how irregular the free cash flow figures have been. So that's a bit of a challenge. But at least as of the last 12 months, it's looking pretty strong from a free cash flow yield perspective. So that's most of what I wanted to cover, guys. Let's see if I have any other tabs here that I wanted to touch on. I don't think so. Let me just check my notes real quick. I think a big part of this story here is the near future looks challenging, right? The next year or so looks challenging for ASOS. finding a new CEO, slowing growth, slowing revenue growth, lowered margins, these increased costs in the supply chain. It's all challenging. And when you apply those challenges to a business like ASOS, where there's been such high expectations for so long, people are heading out the doors. And it's not difficult to see why, especially when you have a short-term kind of perspective on an investment like ASOS. So I think there could be value here for people who are willing to hold this thing for 3 to 5 years or even longer. But again, that big question mark is, who is the CEO? And what do they bring? What are they bringing to the company? Will they be able to execute these ambitious growth plans in this very competitive environment, right? Online fashion is quite competitive. So I think that is all I have for you guys today. Let me know if I've missed anything. I'm sure I have. Let me know what key aspects of the thesis for ASOS have I missed? Or where am I not thinking bearishly enough, right? What glaring red flags am I missing about ASOS as well? Let me know in the comments. And I will leave it there and see you all in the next video. Take care.